on. With just a few days left for 2025 to begin, Harsh is again here to tell us what Nomura is placing their bets on and what their topics are this new year. Harsh, over to you.
Thanks for that, Hiral. So 2025, let's talk about first off what Nomura believes or how Nomura is shaping its strategy, Asia strategy, ex-Japan for 2025. First off, with regard to global challenges. One is, of course, the fear of President-elect Trump announcing tariffs. You also have elevated trade and geopolitical uncertainty, how he's going to deal with that, and how markets are going to cope with how he deals with it is going to be interesting. Second one is a stronger US dollar amid elevated bond yields. We saw the dollar further strengthen to 108 after the Fed commentary today, just showing that a stronger dollar is likely how things will pan out. And bond yields remaining elevated, monetary policies are expected to be less supportive, even despite all of the commentary that's come in today. Likely a less supportive monetary policy is what is anticipated. Now, in terms of the positive factors that we'll have to watch out for, the starting valuations in Asia, especially ex-Japan, look reasonable. At least that's how Nomura is putting it. It's also much lighter on the global investor positioning. India especially, given the amount of FDI investment which has gone out of India, the larger global investment is lighter India at the moment, and that's what India really benefits from. Limited direct impact of tariffs on earnings, especially where India is concerned. Ex-Japan, you're likely to see a lower impact of tariffs in India. China likely to respond to mitigate tariffs put on them. A Chinese easing of sorts could well aid Indian equities, and that's the kind of point that Nomura is trying to drive home. Now, what's on the watch list for investors? The impact of US policy on Asia is going to be important. We spoke about tariffs. Chinese policy outlook is also going to hold the key. Any easing from China could well aid something like a metals, for example. The AI theme is set to continue into 2025 as well. US inflation and growth with the Fed responses, that's going to hold the crux. We've seen the market react to exactly that in trade today, and that is expected to dominate in 2025 as well. Now, in terms of what Nomura's Asia strategy looks like, what it likes at the moment, domestic demand oriented economies is what they are liking at this point. Domestic facing stocks within those economies could well do well. They also maintain an overweight when it comes to India. In fact, most constructive on India among all Asian economies ex-Japan, and that's what is really standing out in that note which I read, because being in terms of valuation support, what they're liking is banks and infra, and that's where they believe India is a good opportunity. US growth as well, they like IT stocks. Any uptick in US growth could well be a great opportunity to buy IT. Defensive areas, pharma, telecom, consumer, there are plenty of areas in terms of defensives within the Indian basket is what they are suggesting. And in terms of structural themes, the EV adoption theme is doing very well in India already, will continue to do well in 2025. Now, let's talk about stocks, because that's the key, right? They like Infosys because likely to benefit from end of EPS downgrade cycle is what they believe. They like ICICI Bank, strong loan growth, deposit growth, just the ROAs, the stability is good. They like HUL from an improving rural growth perspective, also domestic facing, mind you. That's something we highlighted earlier. They also like Lupin. Near-term earnings support is what they suggest, and price hikes is likely to aid sales growth as well. So they like Lupin on that count. They like L&T, classic structural play on infra. They liked infra as well, and that's where L&T also comes into play. Bharti Airtel, strong EBITDA growth expected FY24 to FY27, and that is largely led by ARPU growth, and improving return ratios is the consequence of that. They like M&M. Market share gains is what they're expecting in the PV side. They also expect a twin engine to work, tractor sales to also make a bit of a comeback, and that's probably why they are very, very positive on M&M as well. Those are, of course, what they see in 2025 as well as their top picks from India.